Hi guys, thanks for tuning in to another episode of Nuggets News. Another massive week around the world. We've got so much macro news to get through, as well as all those crypto headlines. We do welcome over 1,000 new subscribers. It's so great to see so many people showing an interest in what is going on in the financial world when things really are changing all around us. So in particular this week, two of my favorite videos of all time really, when we spoke about how the junk bond market may be about to collapse, and we're going to talk about what happened the day after, as well as the overall state of the Australian economy that we do each month with our friend Martin North. Now, for those of you that are new, or you've got friends and family that are interested in all this stuff and going down the rabbit hole, we continue to add to our free resources over on our website. So this week we added things about fiscal policy, and I know a lot of these terms like QE can be confusing. So we've got all those resources, a glossary, and plenty of free content to get you started down the rabbit hole. I also just wanted to mention our members group where you get extra content, all my daily updates, and once a month we've started doing these live updates, which have been really popular, where you can ask any questions ahead of time, and the team and I can do some more thorough research for those questions that you want a deep dive into. And these are the topics that we covered in this month's live stream, and you can rewatch that at any time if you do become a member. Final thing I just wanted to mention was some of the interviews that have been going around lately are just fantastic. And each week in the group, we do a sharing of whatever the best content you watched was. And I recommend everyone watch this interview with Danielle D. Martino Booth. So she's an ex-Fed governor. She's an economist. And this was just hearing it from the horse's mouth, everything that we talk about on the channel, and that, theories that go around about what might be running through the Fed's head at a time like this. Probably the best interview I've listened to in a very long time. So be sure to check that out, and let me know the favorite interviews you've watched as well down in the comments below. I know we love to get those conversations going there. Now, before we get into the Australian news, I just want to mention that you can short the Australian market on eToro. This is a question we get asked about a lot. Can you make money on the way down if we go into this bear market? And it's actually pretty hard to short the Australian stock market anywhere in Australia. So it's very easy to do. The code is Oz200. That is something we get asked about a lot. Look, if you're a beginner, you shouldn't be shorting markets. They've got a virtual account, which you can click on here and practice all that. And we've still got that $100 Bitcoin sign-up bonus for those of you that are interested in trading. Okay, so let's get into the local Australian news, where we have definitely flattened our curve. It's really good to see. We would hope that that would be the case when we've all been forced into isolation. But people were asking me about whether the weather can affect it. And here we see Western Australia. That's probably got the flattest curve of any of the states in Australia, just about. Well, South Australia too. But the point being that these are states that are quite warm. Now, yesterday, Perth recorded its hottest April day on record. So whether or not that does have some sort of relationship, maybe that's a good thing to help us stamp it out now. But we are heading in to winter, and the rest of the world is heading into their summer. So look, that can be a good or bad thing depending on what climate you're currently in. Now, unemployment did jump. This is the Roy Morgan survey, nearly 17%. This is something that I did predict, unfortunately, and we know that a lot of this is due to what's happening with forced isolation and the coronavirus. So we have to wait to get the real statistics that do take weeks or even months to come out in Australia. But from what we've seen around the world, we know that these numbers are going to be huge. But Australia is more likely to be affected. This is why I've been warning about this for so long, because of these huge levels of household debt, and people live paycheck to paycheck. So this is something that's likely to worsen our recession, along with the fact that a lot of these stimulus measures, it's now becoming apparent that it's going to take time to get to where it's needed. So no surprise here when Australia's AAA rating has been revised to negative. That was by S&P ratings agencies. So there are 3 ratings agencies. That does possibly make it more expensive for our overseas funding to come in and help our banks. And we did see those interest rates spike as well. But there's so much money being pumped into banks at the moment, I don't think they're in any danger of being insolvent as long as the printer is firing at the Fed and the RBA. So banks have been warned to slash their dividends. Other countries actually phase them out or force them to stop paying. But Australian banks have been told or recommended that they're considering cutting their dividends. So that is something that we want to see, because a lot of Australians actually rely on the dividends. So there's two sides to every story, but I don't think you can be getting bailed out and also, paying shareholders money at the same time. So someone's got to, make a trade-off there. Mortgage stress has jumped. No surprises. Watch the video with Martin where we do our deep dive. And thank you to everyone that is sharing this video. Since we've started talking about some of these more controversial topics, YouTube doesn't push this video as a recommended video or even show it to you if you're a subscriber and you've even got notifications on. So this normally gets 50,000 views a month. Last month only got 20,000 views. So thanks to you guys that are watching it and sharing it. That really does help get the word out. This was a headline that was thrown around during the middle of the week about Airbnbs being declared illegal. Now, I don't think that's technically correct, and a few of the story writers backpedaled a little bit here. But either way, I guess the point remains that Airbnbs are seeing a huge drop in bookings because we don't have tourists and travelers. So that is going to hit a lot of people that were reliant on that income. This just gets into the debate about who should be bailed out and who should have their mortgage being able to be, paused and whatnot. Now, we're hearing stories of these people that had 20 or 30 Airbnbs and they're subleasing them out, making a lot of money. Now they don't have those bookings. And a lot of the time, the landlord wasn't aware that that person was doing that with their property. So this is all going to come to the surface over the coming weeks and months. And that's where I think it's going to be hard for us to just have a V-shaped recovery that goes exactly back to how things were before all of this, because we had so much games and things just being stretched from what is normal and fair market beforehand. So 600,000 Aussies have applied for this early access to their super. We can get $10,000 or $20,000 out to help you. Now, the debate here is whether or not you should touch your nest egg, particularly when the market's down, because that might grow and be worth more in the future. Some people saying there won't be super in the future. So just like we've seen in America, a lot of these pension funds are already running out. So let me know what you think about that down in the comments below. Either way, this is very, very topical for these people that need money. But this is the issue here. It's something I'm pretty passionate about, and I tweeted about this and spoke with it in Martin. With Martin, some of these super funds are now freezing withdrawals, and you're not even allowed to sell and switch to cash in your own super fund. They're saying no. You are going to be forced to stay in these assets. And that's because a lot of the time these assets aren't even stocks. They're not listed. So they're very illiquid. They can't find a buyer at the moment. So it's all good to say that we've got all these, investment properties or these sophisticated derivatives, but they don't have a buyer. There's no market price. And this is why the whole system, the derivatives that we speak about, can be this house of cards. When something like this happens and people need money, nothing is worth what that number on the screen said it was worth back in February when people are cheering all-time highs. Some interesting comments from one of the Labor Shadow Treasurer, I think it was here, admitting that super is a Ponzi scheme because we are forcing people in with, 9% of their incomes for years and years and years. And there's only so many assets in Australia to invest in. And a lot of these super funds focus on Australia. So look, the banks get all this money. Everyone owns, the big four banks and Telstra and gets their dividends. And it's just this Ponzi-like structure to some degree that has led to the issues that we're seeing now. So if you do manage your own super, you're very happy right about now. You guys know that we have our partnership with New Brighton Capital, and if you're interested, there's a free consultation. Ring up Mike and the team. We'll look after you and let you know whether or not that's for you. You can hold your own stocks, cash. They are the crypto specialists in Australia at helping you get sorted, and gold and silver. Whatever you want to hold, you can even hold a lot of those assets in your own custody, which people are really loving as well. So thanks to New Brighton for their ongoing support. As we look overseas, we've nearly touched 1.8 million cases. We've passed 100,000 deaths. I think this number is a lot larger because we haven't tested everyone and it's so widespread. I actually hope that it has really got through a lot of the population so we can clearly see that people have developed antibodies. That's what we want. That's a really good outcome if we can get to that point. Now, these curves are definitely flattening now. If we have a look over at the US, they have probably seen the worst of it now as well, fingers crossed. If we look at the deaths per day, this was the leading cause of death for a couple of days in America. And that's why we need to isolate and try and stop this, because this is what can happen if you don't get on top of it early. Now, thankfully, we are on top of it. There's debates about whether or not some of these deaths that have been included are from people that had other comorbidities. There's also an argument that I saw an article where there's more people dying at home than ever before in the US, and they're not being counted. So, guys, there's always two sides to every story. For me, it's just so clear when we see, ICUs overrun, morgues overrun, the hospital system, healthcare system being completely stretched, that this is worse because of the degree of management that these cases require. And it's not fair on healthcare staff to say, oh, let's just let it get through the community when it can become the leading cause of death. And you're seeing nurses work around the clock. They're getting sick now as well. Let's hope that we are really getting in front of it and we can further the conversation about how to get back to normal, because at the moment 17 million Americans have filed for unemployment in the past 3 weeks. They're the sort of numbers and the percentages that we're expecting in Australia as well. But as we said, France, Germany, UK, Australia, Italy, these places that were all hit hard or moderately, they all seem to have these flattening curves now. One thing we do need to be mindful of, the reinfection. Now, we don't know if these were people that had the virus in them and it was latent and it sort of sprang back up again after being dormant, or if these were actual reinfections. We don't have all the evidence yet, but if it turns out you can get reinfected and your body doesn't produce antibodies, we then need to find out if that's the case for every strain, or if that's a wide-arching thing. And if that's the case, that is not good. But I don't think there's enough evidence to say that that's a real concern yet. The conversations that this is going to start are all about globalization. So we've seen Apple quietly cut their orders from Chinese suppliers. I don't think there is going to be this rebound that people are talking about, and we've seen an aggressive bounce in the stock market, which I think is a bit hopeful. Japan also looking to shift all their production out of China. India have banned exports of the promising drug. We've seen hydroxychloroquine. Ideally, you want to be using that with zinc and azithromycin, another antibiotic. Now, there have been some reports that has the side effects that I was warning about. But overall, I think we've now probably got nearly a dozen smaller trials where it does look to be promising. So this is why I think people are a little bit more positive than they were 2 weeks ago, and was just overrun with fear. We need to start having these conversations about the second order effects. And this is where I do agree with people that in some ways we've gone too far. So there's no point shutting everything down if all of a sudden, I know this is a little bit taboo, condom factories, but condoms actually prevent a lot of disease and serious disease. So we don't want the world running out of condoms, for example. We need to think about the second order consequences and who are essential workers that we can get back to work before we have other problems spring up. And the main part of this debate of everything that's going on, and that I'm fully on board with, that I think that governments have gone too far and abused their power. So Edward Snowden always tells it how it is, an architecture of oppression and surveillance. I've reported on things that are going on and how Google, Facebook are now handing over all your third-party data to governments to track you. We've got drones in Australia tracking us and whatnot. So look, if that power doesn't get handed back, that's when I think we're going to see people get very upset and put on yellow vests and the like. Speaking of, this was a tweet that went semi-viral about masks in the US. So it was only a few weeks ago when they were telling their citizens not to wear them. Now we've got 10 cops forcefully pulling people off trams or buses here. The thing I heard was that you don't even have to wear them on some public transport. Look, I don't know what the truth is, but I don't think anything justifies a dozen cops, ripping you off a bus and, physically harming you because you haven't got a mask on. Now, not everyone loves Jack from Twitter, but I think donating $1 billion, a third of his wealth, to help fight what's going on, it is fairly noble. And like I spoke about last week, there's going to be people out there saying, well, that's the equivalent of this, that, and the other, but it's a lot of money. And if that goes to good, then I'm all for it. He's a huge supporter of Bitcoin, and I think he does mean well, even though he has, I know, suppressed a lot of opinions, and Twitter does really choose what voices are heard and what are silenced and whatnot. But look, we've had a lot of people donate a lot of money, and there has been some good come from all this. So when you think about the governments and the stimulus, and that is the money that's meant to be going to where it's needed, I think it's now becoming clear that that is being more used to help the wealthy once again. So you hear these stories about a spike in refinances and whatnot being declined, whether it's Australia or over in the US with the Mortgage Bankers Association. JP Morgan Chase are raising the borrowing standards because the outlook has darkened. Now, I actually got some documents sent to me from someone on the front lines here in Australia, and they've been told not to even consider refinancing or lending mortgages to people that are in tourism, retail, these service sectors, because they think we're going into a long recession. So these people that thought they were going to be able to pause their mortgages are being told, well, no, you don't qualify. So that is where I think in my mind that this does drag on for weeks or months, no matter how quickly we can start to get things open in stages. It's not going to be a V-shaped recovery. So banks, once again, they are going to be in the middle of the money that's printed and the small businesses or the individuals, and they are going to make a risk-free killing on all these loans. That's just the way it is. And that's why I think the Fed are trying to get to this system where they can directly have accounts with individuals and bypass the banks. And this is the power struggle we're going to see. The largest French bank lost 200 million in derivatives trades as the market crashed. Look, that's no surprise. There's huge losses on Wall Street, but it's where they're all now getting bailed out that frustrates me. So the UK have unleashed helicopter money. Now, this is historic because it's the first time we've seen a central bank openly monetize the deficit. So the government doesn't have to even, issue those bonds and you're doing the middleman style thing or buying them off the market after the government issues bonds and banks buy them or whatnot. This is now just directly saying, you guys spend, we'll give you the money. And really, the Treasury, the UK Treasury, the government is almost in control of the central bank. And this is very similar, borderline to what is happening in the US, where Trump is just going to spend another 2 trillion here, another 2 trillion there. And then you start getting these questions about, well, why do we need the Fed? Why do we have to pay taxes? And that's, again, we are never going back to normal. These conversations are going to change things forever. This was a good piece from Missouri about bubbles. A list of 10 for those of you that want to read the full article. But basically talking about index funds. This world index went up 10x over the last decade because people have just been stuffed into these index funds. You guys know I've spoken about this a lot on the channel. Share buybacks, trillions of dollars have been spent on buybacks, and now these companies are getting trillions of dollars in bailouts. Now, someone asked me before on Twitter about why I'm against, why do I think that rich are getting richer and that's not fair when you can use leverage and invest and whatnot? Well, that's because the wealthy use that leverage and the free money, and they do make money on the way up. But when things go down, they don't lose. So you can't say it's good because they can make money, and then if it goes down, it's not bad for them. And that's where the average guy gets hit because he doesn't have assets and he's lost his job. And then now he's being diluted, the value of any money he has, because of all the money printing. So number 3 here on the list, corporate debt. You can see that is trending higher. And that leads right into this whiteboard video I did during the week, talking about the US energy sector, particularly shale and natural gas, and some of these ETFs and products that are all reliant on these companies, and the huge percent of these that was staring down the barrel of failure if the Fed didn't come into the rescue and bail them out. So these are some of the tickers. You can trade all of these. USO, UNG is the natural gas. XOP is the oil and gas one that I spoke about that I've been trading a bit lately. And the Fed just the next day, I think it was 12 hours later, announced for the first time in history that 2.3 trillion that they're going to start printing will be used to buy junk debt and junk debt ETFs. This is insane, and this is something I warned about if you're going to short these ETFs. So the investment grade ETF, LQD, touched on this a few weeks ago, as well as the higher yield, the more junk bonds, HYG and J and K are the tickers there. So all of these are things that I've traded here on eToro. I've done tutorials on how you guys can short them, and that was a very profitable trade. And one of the things that I literally said was, be careful. If you're in profit, you might want to think about shutting these trades down and taking profits, because at any stage the Fed could jump in and buy these up. And have a look how quickly it's rebounded from 85 back over 100, because there's no such thing as free markets anymore. And I completely agree with people that are saying things changed forever this week. The US Fed is now buying ETFs of junk debt. Companies are no longer allowed to fail. What message is that sending to people? Go out and spend on the worst things that you can imagine. Use money, borrow money at 0% interest to buy back your own shares and to pay yourself huge bonuses, because if anything ever fails, we'll bail you out. I don't know if this bubble can get bigger. Are people going to finally put their foot down and say enough's enough? This battle continues. For those of you that aren't interested in trading, oil's been very volatile lately. We haven't got the resolution yet. And Saudi Arabia and the US are at it again with threats that they're going to remove troops out of Saudi Arabia if they don't come to this resolution. So as always, the petrodollar, these things get very topical very quickly. Let's hope that emotions don't flare between those two. Either way, it's the US banks that will come out in front. They'll prepare to seize all these assets. So they'll end up owning, all these companies' assets if the shale boom goes bust. With that money that they printed out of thin air, they took no risk, and now they get to own all these assets as well as getting bailed out. So when we have someone like Chamath here, he's been all over the news lately. He went on CNBC and said, let them fail. This is just something that billionaires don't say normally. And sure enough, all the hosts were a little bit gobsmacked saying, you can't let that happen. But he's right. When a company goes bankrupt, their assets get put out, someone else can come in and buy them up for pennies on the dollar. Some of those workers will get hired again by the new company. It's not the end of the world. It's management that should get punished. So watch this interview floating around on YouTube with Chamath if you haven't already as well. Dan Tapia, he's talking about how how can the dollar be going up with all this money printing and whatnot? We are heading down this inflationary or hyperinflationary path. And sure enough, this downward adjustment takes time. This is what I've been saying as well. And this tends to lag a little bit. So he's saying that it can lag by, what's he got here? Anywhere from around 60 days. I think it might even take a little bit longer. But all this money printing will eventually weaken the US dollar. But at the moment, everyone is seeking the safety of the dollar. But he's also very bullish on gold and Bitcoin, as you guys know. Now, speaking of gold, this is an article or a tweet put out by American Tusa. Read the full article on his website if you like, talking about all the mines that have been shut down. So this continues to grow. We're up to over 300 now. And as you can see behind me, gold and silver make up more than 50% of these mines. So this is very good news. It's a little bit like the precious metals markets are having their own halving, like Bitcoin is, where there's going to be a big reduction in supply as long as all these mines are shut down. So the IMF, of all people, are very clearly stating now that they anticipate the world is going to have the worst economic fallout since the Great Depression. This image has been floating around, Dow's best week since 1938. Same week that we had 16 million Americans lose their jobs to date. So people saying that this doesn't make sense. What I will say is that markets are forward-looking. So they're, the same time that we see this number peak, which it may have, markets are going to say, well, does that mean the worst is behind us? But I think the thing we need to acknowledge is that trillions of dollars are being pumped in and fundamentals are out the window. The world's upside down. Look, even Elon Musk chimes in with a little bit of a meme here about the economy and what's going on down on planet Earth. Robert Kiyosaki is another thought leader. He's talking about why the dollar is going to die. He's just so bullish on gold, silver, and Bitcoin. Not the ETFs. Use those for your trading and whatnot if you want to in the short term, but make sure you own the real metal if that's what you want to get your hands on. And as I've done videos about, exploit those. If you can take advantage of the low paper price, ride it up until those prices meet again, and then buy your physical and get more than you would have, you're actually using their own system against them. So I did do a tutorial on how to execute that trade as well. But more and more of these mainstream pundits, the articles, the videos, the podcasts, people are starting to get the idea that these hard assets are the real deal to get out of fiat currencies. Now, tying this all together, I think this is the most important trade of our lifetime, and the US dollar being the final penny to drop between the two most traded currencies around the world, the euro dollar trade that Rail talks about. But things have been shaken up forever because of cryptocurrencies, and particularly stablecoins. So this was one of my favorite write-ups that I've done for members. A few of you like the cheeky title here, always take the tether with you, a crowded house. And I got that title from the fact that we've got so many people on the sidelines now crowding out exchanges and stablecoins. Billions of dollars of stablecoins were printed, or money has gone into those exchange stablecoins in anticipation of buying Bitcoin. So look, price was down at 6.7 last week when I thought we had a bit of a pop coming. We normally get a pop, and look, we've had a little bit of one, but at the moment we'll get to the technicals in just a second. Synthetics have actually got their synthetic Aussie dollar now. They've partnered up with Relay Pay. This is another example of how you can get that liquidity around the world through crypto better than through banks. And the way that Synthetics works is that I can send you synthetic Aussie dollars for synthetic euros, and we don't need these liquidity pools, or we don't need the other person to own that currency and be sitting there with a tab, as we've seen with the current banking system. We don't have to wait days to settle. This is just a matter now of educating people, getting better apps and user interfaces. And this project, you guys know I love it, and it can really take on the banking system and global payments. And it is competition for things like Ripple. So I know they've had these partnerships being discussed with Bank of America and whatnot. Price of the token does continue to struggle a bit, but I just think that this is the hottest space for competition. We've seen SoFi, as it's called here, so Galileo, $1.2 million deal. Everyone wants to get into this space and basically make those banks less relevant. Visa have backed a new card from Fold. So this actually integrates Lightning payments, but it also gives you Bitcoin back whenever you spend. So imagine using your Visa card to buy more Bitcoin to actually get Bitcoin as a reward. I know that is something you can do, and a few of you have already done that. Binance rolling out more currencies around the world. So there are hundreds of currencies that can now get out of that fiat and into crypto. I absolutely love seeing this all come together. And the name of the Kenyan currency there, how cool is that? The Kenyan shilling. Now, Binance started those IEOs, and they've certainly died a lot recently, and something that I told people to avoid for the most part, unless you're going to flip them, because I believe a lot of those are basically shitcoins. And now Tron is launching IEOs on Poloniex. I think this is going to be a massive flop. I think they're probably going to pump up the first one or two to try and make things look good, but I'd certainly give you a word of caution if you are thinking of touching IEOs on Poloniex. Good news for Icon holders. They've unveiled a new consensus algorithm. So this is LF2, very similar to Byzantine fault tolerance that's implemented in things like Cosmos, EOS. These have been flavors of the month where people have been really excited about the speed, Tendermint and whatnot. So look, Icon is one that's been rejigging its image, and hopefully the technology behind that can actually back it up now and get some real world projects building on top of Icon. Into the Ethereum news, where Reddit, we've finally got this news that they are going to be coming out with some sort of token-based reward system. The ETHTrader subreddit has had donuts for a while as their rewards token, so it looks like Reddit have picked up on that idea, and I'm very active on Reddit. I can't wait to see how this all works with these tipping systems. Status have launched their private peer-to-peer messaging protocol. So look, in an age where we're hearing that WhatsApp and Facebook and all these end-to-end encrypted apps are still being monitored, and you've still got to trust the company even if it is encrypted end-to-end. We've now got these fully decentralized apps that are built on top of Ethereum and encrypted, so there's no one that you even have to trust, and that's what decentralized blockchains are all about, removing the need for trust. We've got more real estate being tokenized by Realty on Ethereum, and the reason that I'm excited about this is that this can all be integrated now into the world of DeFi. So PiDAO was the latest DeFi project to launch, and they're launching their Bitcoin Pies. So what's a Bitcoin Pie? Well, it's basically a token that is a basket of other tokens, and the basket is made up of the different flavors of ERC20 Bitcoin. So we wrap Bitcoin up in a smart contract. There's 4 different projects doing that, and to hedge against the risk of one of those projects having volatility or illiquidity, we put them all together. So we have this Bitcoin Pie, that's a tradable token. Now we can have Bitcoin Pies as collateral with all our other stable coins to back DeFi loans and whatnot. It's just amazing how much the Ethereum and DeFi and stablecoin space has grown. So a year ago, 95% of stablecoins were on the Omni layer on top of Bitcoin, $2 billion, and little old Ethereum had 160 million, so 95%. Here we are a year later, and the majority of Tether, 80%, is now on Ethereum, so 4.7 out of $6.7 billion, as well as all these other stablecoins like DAI, USDC. They're all out there these days, and it's being integrated. We've got those good yields that are available that are attracting a lot of people to the space. Now, speaking of those yields, you might remember the no-loss lottery I covered a while ago called Pull Together. And now we've got no-loss investing. So look, I know at first glance, and if you're a beginner, you're going to think that this sounds like a massive scam. But the way it works is you put in your stable coins, and that interest that accrues, they'll automatically invest that for you. So look, it's just taking advantage of that interest and putting it to work, whether it's buying a lotto ticket or investing it into something. Cool to see DP there. Our monthly Ethereum community update. Thanks to everyone that donated. I think we got 300 DAI in the end, which is over 500 Aussie dollars. That means I can hire someone to do extra research to bring you guys even more great content every month. And I will be splitting that with Anthony, who's co-host of the show. So yeah, thank you for all those that donated to our Gitcoin grant. Ethereum premiums have skied again. So people are paying a 500% premium to get exposure to Ethereum, because it's the only way at present that you can do it through your, legitimate Wall Street account for these people that don't want to set up crypto exchange accounts, and they're not knowledgeable enough. They don't have the security. They're worried. It's that trust factor. So they go to what they know. You might say, why would anyone pay that 500% premium? Well, it is locked up for a year. So these people are hoping that a year from now, the premium either stays the same and Ethereum goes up, or both happen, okay? And they're still going to make money on their investment through the Grayscale Ethereum Trust. But either way, it's good news that people are paying a big premium to get Ethereum exposure. Vitalik tweeting about Amisa Go this week. Someone asked him, what have you been playing around with? And he said that, Amisa Go, playing around with the plasma chain. So yes, the project has been chugging along this whole time. Not sure if we still call plasma sidechain these days because of how the terminology and the research has changed. But good to see the man from the top acknowledging that this is one project that's still chugging along after all these years. Final couple of bits of research here. We've got the number of Bitcoin addresses with greater than certain levels of coins here. All of them are basically trending up. We've seen, whales accumulate. You guys know the story. The number of coins held on exchanges, it's been going down as people look to hodl their Bitcoin. The Ethereum number's been trending up, so I'm not sure if that means it's necessarily going to lead to sales. A lot of this has been happening on Ethereum, on Bitfinex for Ethereum, and they've just been rolling out staking and custody. So whether or not they're going to be getting into the DeFi lending and earning as well, I think that is the route that they may be going down, and this might be the canary here letting us know, but we'll have to wait and see how that plays out. Final chart here is all about the halving. So around a month now to the Bitcoin halving, but Bitcoin Cash had its halving, and we've seen the hash rate really plunge here. So I think the estimates are that it takes something like 1 Bitcoin an hour, $7,000 an hour, if you actually wanted to attack the network. And blocks have only been processed every hour or so until the Bitcoin Cash difficulty readjusts. So look, that is a bit of a worry. I do hope that things will all level out there. BSV, interestingly, hasn't fallen yet, which I thought it would have as well. Whether or not that means that there's only the hardcore BSV community that are mining that coin, they're not even worried if their rewards are halved because they're going to mine it no matter what. I'm not really sure, but I think with Bitcoin, we could see a bit of a run up in terms of everyone getting really competitive and hoping that makes the drop less severe when those earnings halve. But we'll talk about that more in next month's mining update. Final interview that I recommend you watch this week is with Nicholas Nicolaisen. So he is a Bitcoin billionaire who dollar costs average thousands of dollars a day into Bitcoin and ETH. And I think sometimes we forget that these people are out there. More and more of the super wealthy are looking for somewhere to park their wealth out of traditional financial markets as things change around them. And it's just a matter of time. You know, it is happening. I know it feels like it's been painstakingly long time, but I'm so bullish. I couldn't be more bullish. We've got another Bitcoin fund listed on the Toronto Stock Exchange this week. Things are happening. In terms of the charts, guys, we will look at those in just a second. I just want to mention that FTX have got the Quant Zone, which is a new product I'll talk about more going forward. So you can actually automate trading strategies using metrics and indicators, and this is something I might put a bit of time into going forward, but they've got that double discount for you down below. We've done videos on how to hedge with the Bitcoin options, all my favorite products up there. You can trade gold all through the weekend as well. I know plenty of you want to know how to trade gold, as well as all their indexes and the best coins there. So thanks to FTX for supporting us, and looking forward to talking about that Quant Zone product more. Okay, so let's have a look at the charts. We've all been watching this rising wedge. Volume hasn't been too great. I did mention that we had some signs that the bulls were stepping up. That's really died off. I think the bears are now in control. We've got these 3 levels I've been watching that are the weekly resistances. And if we close like this tomorrow with this wick up here after we've had 3 weeks into this resistance, I don't think that's good. I think we would likely head lower. At that point, I'm then looking for my fib retracements, particularly down here is that first level of support around $5,000. Now, Ethereum and alts were outperforming this week. Everything is going to be highly correlated, and to me, it really is about what the stock market can do. So as you can see here, the stock market had this bounce 50% retracement, reasonably low volume compared to the selling we saw. A little wick because it did try and peep its head above that 50% and was unable to close. Look, the Fed's thrown everything at this market to get it here. Maybe we get to this retracement here, but I really think it is a matter of time until we roll over. Unless they do more, unless we get stupid amounts of money, and BlackRock come in and it's clear that they're buying trillions of dollars of ETFs, I think that's what it would take to get us up to these higher fibs or back to all-time highs. I don't think that is happening anytime soon. So look, that's how I'm looking to play it. I will be looking to short the Australian market in particular, as I mentioned at the start, if we roll over. That's everything from this week, guys. Head over to the website for our free content. I hope you want to join our members area for my daily updates to stay up to date. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and we'll talk again soon. Cheers.